I'm looking at some coffee stocks. Luckin was a stock that was out there on the web as a hot stock to take a look at. All right, as a hot stock to take a look at. Luckin Coffee in Yum China hit again by the coronavirus. Notice how the coronavirus is coming up again, even in the individual stocks we're looking at. They both break lower. This was on February 7th after a new report on the rapid spreading of the coronavirus on this cruise ship quarantine in Japan. Analysts think the fear of being out in public in China needs to fade before Luckin and Yum China can retrace their drops from the last 4 weeks. That's one coffee company. Watch this. Dunkin' shutters half its China donut ice cream shops in China. Dunkin' brand shutters half its China donut ice cream shops, and that's because of what's going on during the outbreak of the coronavirus. Another coffee company, Starbucks. New concepts expected to boost Starbucks. While most of the attention on the coffee chain over the last week has been on the impact of the coronavirus on the store traffic in Asia, reports out of Chicago continue to indicate the new Starbucks roastery on the Magnificent Mile continues to see huge traffic. All right, how cool is that? And Cafe Bustelo, no Mary, you don't have Cafe Bustelo. Roasteries are a critical piece of Starbucks' increasingly diversified portfolio, one that also includes traditional stores and pickup-only store in New York that lets customers order in advance and pick on their phones and pick up their orders without the wait. All right, so 3 different coffee companies, and again, it started out with Luckin because they are in China. Let's go open up the watch list again. Let's go pull up my 3 coffee companies. We're going to look at Starbucks, we're going to look at Dunkin', and we're going to look at Luckin Coffee. Right now, Starbucks, slightly overvalued, trading at $90 and a value of $64. But look at the upside potential with relative value. Look at the relative safety. Both of these fundamental indicators are above the value of 1. So you know something, Starbucks may be a trade that I would hold for the longer term, and RT is above 1. Now, because the stock is overvalued, again, that means people are willing to pay a premium to own the stock. And it's a buy recommendation. Dunkin' Donuts, on the other hand, also a little bit overvalued by $10. Good upside potential, not as good as Starbucks. Good safety, not as good as Starbucks, but fundamentally sound as both indicators are above the value of 1. What's hurting it? The stock is not in an uptrend because RT is not above 1. It's telling me that the stock is pretty flat right now. Telling me that the stock is pretty flat right now, and it's a hold recommendation. Let's go down to Luckin Coffee, way over its value. Remember though, this is like the Starbucks of China. That's what this is. This is more of the Starbucks of China. At $38, trading at $38 with a value of $4.24. The long-term upside potential, not there, whereas relative value is below 1. The safety factor, not there, relative safety below the value of 1. What's helping it though? RT shows me that the stock is in an uptrend and also a hold recommended stock. So as I analyze these stocks, I can still get a feel. Out of these 3 stocks, I can see that Starbucks is probably the best by way of analysis, then Dunkin', and then Luckin Coffee. Let's go take a look at all 3 stocks on a graph though. Let's pop them up. There's Starbucks. Starbucks is a little bit of a channel. I'm going to take off the last close. I'm going to throw on a horizontal line real quick. That's a good level of support. Let's highlight that right there. That's a good level of support, and it already created a level of resistance. Right now, put this on a 3-month graph. The 3 and the 8, oh, that's why I click on OK. The 3 and the 8 on the stock have recently crossed a day ago. So with that being said, the stock does have a price target now of about, let's go put on what my level of resistance at, about $93.58, unless it can break through that level of resistance. But I like that it formed another level of support right here as it dropped, now moving higher. The 3 and the 8 have crossed, earnings higher than it was 3 months ago. Ooh, watch the volume though. Watch that volume as volume is starting to fade off as the stock is moving higher. Just keep your eye on it. Not telling you not to buy it. I am letting you know that volume is conviction. I'm not feeling real convicted on the stock's price moving up right now. Let's go to the next stock, which is Dunkin' Donuts. Fell hard. Notice that with Starbucks, it's in a channel. It fell, but now is rebounding. Looking at Dunkin' Donuts, the rebound is not there yet. What is the difference between value and relative value? Value is what we feel the stock is currently worth. Relative value looks at the stock's long-term price appreciation potential, its long-term upside move as compared to an alternative investment as like in a AAA corporate bond. So when I look at relative value above the value of one, the more it is above the value of one, it means it's a higher percentage that holding this stock will outperform the safer investment in a AAA corporate bond. But value is what we feel the stock is worth, and we want you technically to be in a stock that is undervalued, all right? Undervalued. Can you mention donuts after the pretend? No, no donuts. Nope. All right, let's go to the next stock, which is Luckin Coffee. In a little bit of a channel. Even looking over the last 3 months, the stock mostly has been in a channel. If I'm going to think about getting into this stock, I would wait until it breaks above that level of resistance before I pull the trigger. Watch the earnings though. Earnings may be higher than it was 3 months ago, but their earnings are negative. They are not making money. All right, that's another reason why a stock could be overvalued. When you're looking at stocks, the earnings or the earnings growth rate. The earnings growth rate is sitting at 23% a year, but even with that, they still are not making money, and that's important. Can you say what valuation method is based on? I said that the valuation, what we say and what a stock is worth, is looking at the stock's earnings and the stock's earnings growth rate. The stock's earnings and the stock's earnings growth rate is how we look at calculating what a stock is worth. All right, what a stock is worth. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.